thank you again, everybody, for being here at the North American Blockchain Summit, Satoshi Action Fund, of which I'm the CEO and co-founder. We are very excited to be collaborating with the TBC, not only here at this conference, but also on the policy front, policy landscape. It's a really critical time. We have a critical window where we can make a key difference. So we're excited that despite the bear market, that many of you are here and participating, and that this industry is growing. In just a moment, I'm going to introduce this next moderator that we're having up here. My good friend Will Foxley is going to be coming up. He's a host of his show, The Mining Pod. If you haven't checked it out yet, make sure you do. It's a great show, all things mining. And if you're at this stage, I imagine that you are a fan of Bitcoin mining. So in just a moment, we'll be having Will up and some of the most important voices in the space on stage to talk about where we are with innovation and where things are going. I said it earlier, many of you are newer into this area of the stage, so you didn't hear me talk about it at the beginning of the conference, but there's so much innovation taking place in this industry, taking place in Bitcoin and Bitcoin mining. And in order for me to be successful, walking around telling lawmakers, regulators, the value of this technology, we need folks to be building. And the four gentlemen that are coming up here to talk about what they're doing are certainly building. One of them was just mentioning they've got another 300 megawatt site they're going to be developing. So incredible stuff coming, and I'm looking forward to hearing from this panel. Let's go ahead and have Will Foxley come on up and introduce the panel for you.
Hey, everyone. Okay, we're just going to bring everyone up on stage. First, we got Fred Thiel of Marathon Digital Holdings, Tyler Page of Cypher Mining, Jason from Riot Platforms, and Matt from CleanSpark. How you guys doing today?
Very good. Great.
Okay, let's jump right into it. So we have a lot of hash rate on stage, and there's more hash rate coming to the network. Year over year, we had a huge growth within hash rate, and now there's more competitors coming on the scene. And we have to start off with that Bloomberg headline from this morning, which was about Tether jumping into Bitcoin mining. Tether, of course, being the largest stablecoin provider with an $87 billion market cap. And now they are competing with you guys. They're going to invest $500 million over the next 6 months into a lot of Latin American countries to mine Bitcoin. What do you guys make of that? Matt, I want to start with you and just get your thoughts on it. Obviously, new entrants are always going to appear, but Tether is a big player with deep pockets.
Well, from our perspective, we being vertically integrated and kind of an infrastructure first approach, it's not as easy as buying a machine that's a commodity and just plugging it in. There's a lot to this business. We have a 150 megawatt expansion that has been under construction for about a year. In the process of the electricity agreements, the interconnect, the construction of the substation, the life, health, and safety protocols, everything that has to go into developing an operation is a little bit more complex. Now, if you look at it, jump into the business and you look at machines as a commodity and you rely on third parties for hosting, then you have a bit more risk, especially coming into the uncertainty of the halving that comes next April. So, I think it's certainly not without its challenges. More hash rate makes all of us, sleep a little less easy at night because it makes it harder. But I think the differentiator is that the companies that are represented here are the ones that do it right, that do it the most efficient, have the best machines and the best operations. And I think as long as we continue to collaborate, we can differentiate the domestic U.S. mining and continue to do it better than anyone else.
An interesting part about this is that Tether so far to date has chosen not to build within the United States. Let you guys think about that as you want to. But from your guys' perspective, building in the U.S. and Tether choosing not to build in the U.S., do you guys have any thoughts about like regulatory capture there and building outside of it? You guys are all like mostly building in Texas, but somewhat outside of it. Tyler, throw it over to you.
Sure. So, listen, that's a tremendous amount of capital, and this is still a nascent industry, and capital is an absolute weapon, right? So, and pretty much the miners on this stage have all had sort of benchmark capital raising exercises. That's part of the reason why we're up here. We've timed that cycle well and managed it. The thing I'd say, though, speaking more broadly about crypto in general, a little bit less so about Bitcoin, but crypto as it's developed, there are a series of companies, particularly in the United States, that have chosen to go down the regulatory path to work with regulators think about how the industry can ultimately grow and develop very broadly. And there's other ways to sort of hide from regulators, be offshore, not let people know what's going on. And listen, there's money to be made on both sides. We believe, certainly at Cypher, the longer-term way to make money is to lean in, work in the right places, work with regulators, have investors understand the risks, etc. Texas is the world capital of Bitcoin mining. All of our data centers are here. That's partially because we have a great regulatory environment and a good environment for raising capital here. So, in addition to all the challenges with putting that capital to use, it's not as simple as just having dollars and throwing it at the problem. We actually think sort of operating the other way is a better long-term way to make money, frankly.
Fred, same question to you. And you just came back from a trip in the Middle East where you guys are working on a JV. So I'd be interested to get your take on how working in the United States as a listed company, working with the SEC, and then also working overseas with joint partners.
Sure. So we just inaugurated a 250 megawatt set of facilities in UAE. We signed the contracts to do that in February of this year. They're now fully built and operational. Internationally, you have the opportunity, really, if you can work with sovereigns in the right government, in the right countries. They control the power, they control the permitting, they control everything. And with the right partnerships, you can build these JVs very efficiently, very quick to happen. And a lot of times these sovereigns have a lot of capital. So what Tether's really doing in this case is they're finding opportunities where people have capacity, but they don't have the capital to execute. And they're basically coming in as a capital provider saying, listen, I'll be your capital provider. Let's do a JV on whatever the structure happens to be. And then whoever it is that has a site tied up can finish the execution piece. But I think, it's a race to get stuff online by the halving, because come end of April of next year, it's going to be half as many Bitcoin. And Bitcoin is likely not to double between now and then. I think everybody's projections, it'll increase, but not that much. So it'll be very interesting. Tether just happens to sit on a big pile of money right now. So they're trying to put it to work in ways to generate a good return. But I think you look at what we're doing, 50% of our mining capacity over the next 4 to 5 years will be international. 50% will be U.S. We have heavy concentration here in Texas today, but also in North Dakota. And we think there are other opportunities, but there's also opportunities in alternative fuel sources like methane flare gas, biogas, and then just reuse of mining from heat. So I think the biggest amount of hash rate growth is going to be international going forward. Russia's putting on tons of capacity. Latin America's still got to go on. Africa hasn't come on yet in scale. So I think there's going to be a huge amount of growth internationally.
Yeah, I think the big takeaway for me here is thinking about Tether, thinking about what Fred's talking about, what the sovereigns are doing in places like Abu Dhabi, is the amount of capital moving into this space. And I think it's important to think about what is the cost of capital and what are the hurdle rates for the funds and the entities that are putting capital into the space. So a Tether, it based on how they're structured, how they're running, is they are going to have a much lower cost of capital than all of us, which means their margin preference is going to be quite a bit different. And that makes competition a lot harder for all Bitcoin miners, not just us. You have this capital going in, and their preference on of what their cost to mine is going to be is not the same as the rest of us. So they may accept paying additional hosting rates, doing cloud mining contracts. We were just talking about that before we came on stage. Part of that article is Tether's looking to deploy that capital in 6 months. Well, you're not going to build a facility and do all that in 6 months. So they're likely to go that hosted route or cloud mining route in some way. But it shows how much more fierce the competition is going to get. We're going to have a difficulty that's going to continue to increase. I think, exceeded expectations for 2023 so far. And the opportunity, I think, for all of us is, Matt talking about being vertically integrated miners, all of us being focused on being more efficient miners is competing where those others cannot, which is our cost per coin.
Let's stick with the capital talks for a second. All 4 of you guys are publicly listed, which is a huge benefit in terms of just being able to have access to capital. We have a mining market which you can easily split between public and private at this point. There's something over 25 publicly listed mining stocks, whether that be in Europe or in Canada, here in the US, whatnot. US obviously has the most liquid mining stocks. With Tether jumping onto the scene, we now have a pretty well capitalized private miner, but it's offshore. I think that's a new entrant in the sense that they have money that these private guys typically have not had in the past. How are you guys thinking about the competition going forward? Is this like something that's going to be increasingly worrying? Jason, I'm going to throw it back to you because I want to dovetail off what you're just saying. Like, Tether might not have the know-how, but they have the capital. Are we going to see more people like that jump into this space over the next few years with the halving coming up and next bull run?
Yeah, I think we will, because as Bitcoin goes more mainstream, as Bitcoin mining goes more mainstream, this investment becomes more actionable. And I think as public companies, we're a part of telling that story. And in this example, I guess it works to our detriment, bringing in lower cost of capital and against us. But people are seeing the results of Bitcoin mining, and I think they're in all of our companies. They're seeing the benefits of Bitcoin mining demonstrated in grid stabilization, monetizing stranded energy, stranded gas, all of these kind of things. So first movers are, I think, becoming more aware of the value of Bitcoin mining, and that is, just circling back to what I was talking about, means more competition for the rest of us. And that then really drives the focus on these efficiencies. If we're all going to have large volumes of capital, of course, varying cost of capital, and we're all going to be deploying that to buying hash rate and building sites, then the way that we end up competing is around efficiency, and that comes through in technology, that comes through in our power strategy. There's fertile ground to compete on, but I think this is an interesting discussion because we are highlighting this new breed of miner that's coming in.
Awesome. Okay, we probably beat that one to death. There's more to come, I'm sure, in the future, but we can leave that topic there for now. Let's just go over to talking about like different strategies within Bitcoin mining. Everyone here on stage has a different approach when it comes to Bitcoin mining, whether that be a infrastructure light strategy with Marathon Digital we've seen in the past, to an infrastructure heavy strategy we've seen with Riot. We can go through every single one. They have a different strategy. I want to ask, looking back on the last 2 years, which has been some of the most difficult times for Bitcoin miners, just even looking at the metrics, like even compared to the early days of Bitcoin mining, this has been some of the most difficult times from a money perspective. What have you guys looked back on, reflected on, and been like, that was a mistake? And then what are you guys looking forward and saying, like, this could be an opportunity for us to change course or a new strategy to embark on? Matt, I'm going to throw it to you first for looking back and looking forward.
So, we've had some pretty good fortune in the bear market because we've used this as an opportunity to grow. We made our origin, our DNA actually lies in microgrid technology and decentralized energy. So approaching from that perspective, we didn't buy rigs when rigs were high. Instead, we invested in infrastructure. We sold our HODL balance when the price was higher and deployed those funds to build new data centers, to acquire immersion cooling. So, I feel like we've taken some very calculated steps, and we have a team of guys that make these decisions. And as Gary, our chief financial officer, says, we behind closed doors, we're going to beat the crap out of each other and want somebody to prove that the argument or the thesis or the plan going forward is the correct one. And when we arrive at concurrence and we go forward, and I think from our perspective, we didn't raise a lot of money early on like many of my colleagues. Instead, we were a little bit later. We announced a $150 million mining purchase earlier this summer. And, we took advantage of some of the tools available in the capital markets to draw down capital when it was accretive and made sense. So, I think for us, working in Georgia, the relationships we built with the communities, the fact that, we've become a positive source there. We're now, there was a news program that said CleanSpark's participation in some of these rural towns is actually driving down the electric costs for the residents in the city. And because we pay sales tax on that energy and it stays in the jurisdiction, that they expect that it's going to drive down property taxes in some of those jurisdictions. So to have that type of community relationship involvement and impact, I think is what's really been a strong selling point for us. Obviously, being the new kid on the block, we came in after everybody else. There was a lot of catching up to do. So, everybody has an interesting and diverse, unique perspective. I don't think there's a right or wrong way. We're all just figuring out what works best for us, for our operations, and in the jurisdictions that we operate.
Tyler, I'm going to throw the same question to you. Looking back, looking forward, the good and the bad.
Sure. So, biggest mistake I've made is I should have been buying Paolo at Tether drinks at the last few conferences, apparently. I think looking forward, I think the challenge and the pitfall that keeps me and our team awake at night as we think about how the industry evolves is that we've kind of made our bed to be set for the halving that's coming up in 6 months. We're very happy where we are. We're a low-cost producer. We have a 2.7 cents average cost for power, so that puts us in a very stable place, kind of no matter how rough the seas get on network hash rate or Bitcoin prices. We're now thinking about how are you going to mess up the next halving, and how do you avoid that? And what our view is at this point is that the industry's grown up from something that it's kind of evolved from hobbyists, right? People had a couple rigs and they plugged them in the garage and they got bigger and bigger, and then capital markets opened and they bought more rigs. And we think by the next halving, the thing you're going to have to avoid is just being a machine plugger-inner. You have to have a deeper strategy. And at least for us, we see an upward integration, an upstream integration into power generation. And so that's a particularly fantastic opportunity in Texas, given the nature of the ERCOT market. We think there'll be trading opportunities, again, to provide support to the grid and make money along the way when we do that going forward. And this is sort of a perfectly complementary asset for generation, is where strategically we need to make sure we end up in 4.5 years, from our opinion.
Fred, same question to you.
Well, I'd say the big mistake we learned was don't host miners at a coal-fired power plant that doesn't have a grid interconnect, especially one that microbursts knock out. But at the same time, we've done a lot of the right thing. You see, we raised a $750 million convertible bond offering at 1%. When you look at where money is today. July of last year we had 0 exahash running. Today we have around 23 running and continuing to grow. We placed some good bets on machines at the right times. We made sure we had price protection when we placed bets at the wrong times. And we've been able to grow very quickly and focus the deployment of our capital on machines. We've also invested really heavily in technology. We have our own firmware, our own pool, Auradine company who's here. We're, early investor. I'm a big believer in what they're doing. And we're investing very heavily in immersion technology and cooling technology in general. We're migrating from an asset-light model to a fully vertically integrated model all the way down to the power ownership. So we're very focused on alternative energy sources. We announced our methane fuel, our landfill gas pilot site, which is doing some great things. We have a number of other initiatives in other areas related to biofuels and biomass. We think it's an infinite fuel source, and our technology is focused on being able to operate either utility scale sites or essentially operate energy harvesting. Harvest energy, turn it into heat, you sell that heat for something, and you're mining Bitcoin as an exhaust at no charge. I believe, a little bit like Tyler said, by the next halving, as miners, you're either going to be utility scale where you own a piece of your power generation, or you mine at 0 cost because you're doing something else with the energy and you're doing something else with the heat offtake. Those are your 2 options going forward. But we're very optimistic for the next period of time where the blend of our kind of setup will become more and more owned and operated.
Jason.
Yeah, I think about your question 2 ways. With respect to have we learned which strategies work and what doesn't as an industry. Fred and I were talking about this before. it's really the capacity opportunity that drives that strategy. Bitcoin mining, its value proposition is it is capturing surplus energy, and where you find that is in many different forms, and that's going to drive that strategy. Okay, at Riot, we are doing a lot in demand response, but if there was an opportunity to get, hey, 1 cent power, reliably, then we're probably not doing that's not connected to the grid. We're probably not doing a ton of demand response, but that's a very valid strategy. As far as lessons learned, I think there's 100 things that we have learned. All of us are doing something new. This industry is new, nascent. That's what makes it difficult. That's what makes it exciting. That's what makes it a big opportunity. Every design we make, every time we build something, every time we try something, we are learning lessons from that. And that, I believe, makes us a stronger team, makes us a stronger company. One particular thing I'd highlight, I dive in on specifically, once again, demand response. We have learned a lot about making that a part of our strategy over the past recent years. We have continued to scale that up, and we're becoming better and better and more detailed at doing that. And I'd say one lesson learned there is, well, it was very exciting for us. Not everyone loves headlines like Riot's made $33 million selling power in the month of August. So a lot of lessons learned along the way.
I mean, shareholders like that. So a few people liked it. A few people liked it. Okay, I can go right back to you. Let's talk about machines now. So we got a nice watermark from Auradine on here. Everyone's made different purchases this year for Bitcoin miners. Actually, all of you guys have made purchases from different manufacturers this year or investments from them. So we can go right down the line and talk about that. How are you guys thinking about silicon moving into the United States? Does that really matter for your operations? Is that more of a PR strategy move because it's nice to have things manufactured in the States? Jason, first to you. You guys made the MicroBT purchase this year. How are you guys thinking about machine purchases at Riot?
Yeah, that was, I think, a really big milestone for us this year. Historically purchasing all of our hash rate from Bitmain. We did a big order with MicroBT this year. And what that demonstrated is our business is always up for grabs. We're looking for competitive suppliers and vendors who are going to deliver quality products at the right prices. At that time, MicroBT, we tested their machines for several months. We saw really great results. We had a great opportunity with an agreement for them, and we pulled the trigger there. What was particularly exciting about that order, as you alluded to, Will, was that these miners are manufactured here in the United States. And I know Auradine's doing that as well. For us, that really fits into our story about being an American Bitcoin mining company. And don't mean to steal your guys' slogan, but an American Texas Bitcoin mining company really reduced the logistics risk for us. Instead of what we all have to do historically is charter 747s, find a 747, fill it with miners. It's got to land here. Hope the weather's not bad, and then we got to clear customs and all of the challenges around that. To just have those go on a truck in Pennsylvania and just go down the road, long road, but just go down the road to Texas really makes deployments, timing a lot more, have a lot of certainty around that. So I am very encouraged to see the amount of competition that's heating up in the hash rate space. That's great for the industry. That's great for all of us. That's going to drive better innovation, and that's going to drive better pricing.
We'll sort over to Matt. You guys have made a few purchase orders this year, mostly sticking with Bitmain. And from speaking with people at CleanSpark, you guys love Bitmain.
We do. So we have a different kind of approach. The way we came into the space, we acquired existing facilities. So we had, I think, every represented brand of miner that we owned and operated in some of our facilities. So we got to understand, to be fair, some of those were older generation rigs, but we got to understand the nuance and the intricacies of each different brand of miner. What we've done differently when we talk about being fully vertically integrated is we put repair labs down to the chip level on site in our facilities and trained our guys directly with Bitmain. So it's kind of the Southwest Airlines model, right? We'll fly anything as long as it's a 737. So because of our familiarity with Bitmain and the fact that I think everybody up here would talk about a technology stack and our ability to increase the performance and decrease the energy consumption of those machines based on that familiarity, I think it simplifies our business. So for us, the most recent order, 4.4 exahash of machines on a machine that is, 16 and a half or 17 joules per terahash, which is critical coming into this halving cycle. And to buy those machines at $14 a terahash, for us was to not only ensure that we get to the 20 exahash threshold, but also ensure that coming into the next halving, we remain focused on the most efficient fleet that it makes sense, from a CapEx perspective for us to have. So Bitmain has been terrific to work with. I know we've all had, good success with them to some degree. It just made sense for us. We're comfortable with them. And this most recent purchase, they even actually came with terms. So, we don't pay for our last machine until a year after it's plugged in, which is kind of unheard of in this space.
Tyler, going to throw it over to you. Let's talk about the Canaan or Canaan order, the most debated topic in crypto.
Sure.
How to pronounce
Yeah.
it. But
I think it's Canaan. That's how
I've heard it both ways.
principals at Canaan said it in front of me, so I'm just copying them. So I think our approach, very similar to others, it all starts with ROI on the price and the terms and, how can we make the best investment returns on the rigs we can get. And then you kind of tick down a series, an almost endless series of risks, right? Is it a new machine? Is it a well-known machine? Can they deliver it on time? Have they secured all the chips? Are we going to have a trade war with China and a new tariff? And is it built in the U.S.? There's a whole bunch of risks, and you try to put your head around that and price those risks. So we have taken, as part of a general approach to risk, a diversified approach. We have rigs from Canaan, MicroBT, and Bitmain. The Canaan purchase you allude to, I think, speaks to always in this business, it's very cyclical. It's like commodities, E&P. You want to be buying in the bear market and then let everything run in the bull market. It happened to be that we had about 11,000 slots available at 2.7 cents power in Odessa, Texas, that we were looking to fill. We were just scaling up this year, so we weren't sitting on a big pile of liquidity, but we're piling it up day by day as we were putting our investments to work. I think Canaan had a stretch where maybe their business model was not as oriented towards big American publicly traded companies that need aftermarket support and things like that. And there were maybe some reputational things they wanted to patch up, but they're a very commercial group. And they identified us as someone they really wanted to work with and gave us great terms. I'm not sure anyone had ever gotten those terms before, but basically a minimal amount of cash out the door, receiving the machines in advance of paying for them, and then paying them over time. And so in addition to a great headline price, working with those terms, we basically could plug those rigs in and have them pay as they went, which allowed us to get and ramp so quickly. And that's been, I think, reflected in how people look at us. We've snuck up on people over the course of 2023, being kind of creative like that. I'm happy to say it was a really hot summer in Texas. The Canaans we bought are actually the best performing machines in our fleet at very high temps. So, nothing but good things to say about them. But we also just struck a deal also to buy S21s, and we love MicroBT too. So it's all about, opportunistic, and the market has evolved now that in our seat, you can strike the best deal. It used to be kind of take it or leave it. And if you don't sign the contract today, just don't bother returning our call. And, so power has shifted a little bit.
Okay, last question for you, Fred. I mean, this is a good timing because Auradine just had some announcements this week. They came out of stealth this year. They raised a lot of money. Silicon Valley company is building out its new Bitcoin miner here in the States. Thoughts about the investment here? Why did Marathon go forward to put some investment in this company? And then how are you guys liking the rollout so far? And where are some of the ambitions for getting this new machine to market, which historically has been a really difficult task?
Sure. So our kind of internal mandate, if you would, consists of three goals: energize, optimize, and diversify. We have been a Bitmain shop. We're arguably one of their largest customers in the world. But, when you're buying out of necessity versus out of preference, it drives a certain set of decisions. We went down the road of developing our own firmware because the Bitmain firmware isn't suitable for miners who want a high degree of configurability and the ability to underclock, overclock, run miners under different sets of conditions. And we've gotten to a scale where we needed to be able to pick the optimal tool for the optimal situation. We also were very focused on wanting to go not just to single-phase immersion, but also looking down the road at dual-phase immersion. So we needed to work with a hardware provider who could essentially design a miner based on specifications that we thought were important. Bitmain is still selling shoeboxes when they're not selling hydro machines, which not a lot of people are buying. This business is evolving. You need to have high-density compute. You need to be able to do blade-based systems. You need to move to a real professional model. The best thing that's happened to this industry is the proliferation of new brands coming in and the existing brands being able to keep up in the arms race. 2 years ago, the S19 J Pro was kind of state-of-the-art, 30 joules per terahash. Now we're talking 15 joules per terahash machines in a 2-year period, right? Dramatic change in the efficiency of those machines. The Auradine machine, and this came together as kind of a desire. We need to break away from Bitmain. Nobody else really has a machine that offers what we wanted. What was our dream list of things? And as it happened to be, one of the co-founders of Auradine and one of our board members and our CTO were able to kind of come up with a dream. And we were able to convince some of the most savviest Silicon Valley capital providers, Mayfield and Celesta. Celesta's former Intel. Mayfield is one of the oldest VC firms in Silicon Valley, to go raise a lot of money, an $80 million A round for a company that had a napkin. That deal was closed, and 9 months later, they had their first silicon functioning, in machines with great results. And what they have in the pipeline is even better. And it's a machine that's designed for minimal cost of ownership, the ability to manage across your fleet to a targeted profitability of Bitcoin where you're controlling it all the way down at the ASIC level. It's something unheard of in this industry. And as we move to a continued blend of utility scale mining and big fleets, big sites, and lots of small sites, the ability for full hands-off remote capability, et cetera, becomes really important. And that's what I think Auradine is bringing to the pie. But to be fair, we have purchased recently MicroBT machines, Bitmain machines, Auradine machines, and others. And we're testing and using lots of things, and we're rolling out different types of machines and solutions for different systems and different environments. What we're doing in Paraguay is very different than what we did in UAE, which is very different than what we do in North Dakota or Texas. So each location is going to have something unique to it based on the conditions of that environment. And the greatest thing now is there's lots of selection. But one comment I will make, the fact that we're all buying machines at these low prices says that there's obviously a lot of supply and the demand hasn't caught up with it. And I think with the amount of competition now, that ability to just shut off supply that Bitmain has had before is gone.
Is there too much hash rate in Texas, Matt, which goes down the line?
So we're not in Texas yet. So I don't have a perspective, but where we are now and how we're looking to grow, Texas provides tremendous opportunity. And it's likely that we'll end up here. Decentralized is decentralized. China shut down, the Bitcoin network didn't blink. If the concentration geographically is in the United States, the network will adapt and overcome. If the current political and regulatory environment continues to drive it offshore, Bitcoin's going to seek the path of least resistance. So, Texas is fantastic, and the opportunities for grid participation, demand response are obvious in the success of of the co-panelists up here. So, I don't know that too much is the right answer. I think it's a function of the environment, and there's excess capacity, which is why it makes so much sense.
Texas is Bitcoin country. We've got about 17 extra exahash on top of the 7 we've already got in Texas that we'll be rolling out over the next year and a half or so. So obviously we think this is the world capital of Bitcoin mining.
Texas is a great location for all the reasons that have been mentioned and that are well known to the industry. But there does come a point when, you're starting to compete against hyperscalers that are coming in and saying, I need 5 gigawatts of power. Where am I going to get it? And at the end of the day, it is a free market. And if energy companies feel that they can charge a higher rate to a hyperscaler or an AI data center, they're going to do it. And so I just think that while we love participating in Texas, we have to keep our eyes open for other places. And that's why we're investing very diversified nature around the world.
Okay, really quick, yes, no, yes, no. Is the halving priced in?
No.
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 See, I'm Mr. Liquidity. The Bitcoin market, due to its illiquidity, is very sentiment driven right now. But I'm definitely buy the rumor, sell the news. And I have a feeling that longer term liquidity drives this market. And these 4-year cycles, if you layer them on top of liquidity cycles, there's just this canny match that says that I think this halving is going to be different to prior halvings.
Okay, I like that. Okay, thank you all so much for your time today. Thank you for the crowd for joining along with us.
Hey guys, thanks for coming out to the 2023 North American Blockchain Summit. It was the best summit yet. We look forward to hosting you again next year. If you enjoyed the summit or like what you saw in this video, be sure to subscribe. If you're interested in learning more about membership in the TBC, go to texasblockchaincouncil.org to learn more.